and welcome to this July 1st, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring Priceline.com, ticker symbol PCLN. This is about an $8.4 billion consumer discretionary company. Looking at the chart, everything looked great on Priceline until late April. You can see as we were moving up and putting in higher highs, notice the MACD did not confirm this move to the upside, and in fact we had a negative divergence in play, and right at the top you can see a pretty nasty bearish engulfing candle at the time of this negative divergence. From that point forward you can see that Priceline continued to fall over the next few weeks in a flagpole formation. The stock fell from over $270, actually around $274 level, all the way down to about $175. So about 1/3 of its market cap was lost in just a little more than a couple weeks, maybe 2 to 3 weeks. Since that time, since it bottomed toward the end of May, right around the 175 area, you can see we've just simply been going sideways and consolidating this move. So this is a long-term or intermediate-term bear flag pattern, a break of which to the downside would measure quite a ways down, probably down to about the 118 to 120 area in terms of percentage move. If you take another 1/3 of the market cap off from 175, that would take you down into that range. So Priceline definitely setting up very bearishly. I think if I was looking at possibly going in on the short side, I would either do it on a breakdown below 175 where volume is confirming that move to the downside, or a move back up close to 200 on any kind of a bounce. That is a key resistance area, and if it were to head back up there, it probably would coincide with a 50-day test as the 50-day continues to drop. So those are the areas I'd watch. 175, not only has it been recent price support, but it also is gap support, and that stems all the way back to the period back in November of 2009. So this is a long-term support, gap support area, and if it fails to hold and volume picks up, we do think that there's a lot more weakness to come down the road on Priceline. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.